What is going on, investors? Hopefully, guys are doing well out there. It is finally Friday, and it's finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. We are seeing pullbacks in these markets. So if you've been sitting on a little bit of cash, or you're going to figure out a way to get some cash together, you might have some buying opportunities. We'll talk about that more when we get into the technical segment, but we've got a lot of news to get to. Better kick things off with Meta Platforms. Start of the week at 727. This one down big, over 6%, to retreat all the way back to 683. You'll want to see this one technically here in a moment. The company announced LlamaCon, which is a new conference to support the unprecedented growth that the company is seeing in their developer, but this is all relating around AI. They have these other developer conferences. It tends to be more on the platform, like developing ad technology or different types of plugins, or at one time that was a little more popular over on Facebook. It's a little more closed ecosystem that they have now. They also have those Oculus glasses, but again, that's a minute market. So this is interesting. I signed up for it. It's supposed to be scheduled to, April 29th. I don't know if they'll let me in, but I'll try to go, and I'll tell you if anything cool happens there. Not a lot of news actually out of Meta this week. Now we move on to Apple. Start of the week at 243. This one actually held up nicely. You'll see this one where it's at technically. You basically were up like 0.8% to finish the week at 245 and some change. The company announced a new, we'll put this in air quotes, more affordable iPhone 16e. This starts at about $600 per phone, and there's, some upgrades as you put more memory on these things. It can probably get into like the $700-800 range depending on how much memory you're putting on this. Interestingly enough, that this, look, this is one of the phones. It's a slightly repackaged of their A18 chip, which I believe is in their higher end phones, but they introduced a new C1 chip. This is the first cellular modem inside of the phone, and we'll skip forward to the fact that this impacts Qualcomm. Qualcomm has been providing modem chips for Apple for a very, very long time, but the company, and I've been doing some research on Qualcomm for Blue Chip Stock Investor, and I've looked like several hours into Qualcomm, and they really have been planning for this for a while now. So it will impact the company's financials, but I would say in some ways this was already priced in. What will be detrimental to Qualcomm is if other handset makers go this route. I think Apple is in its own category, and we've criticized Apple in the past for the lack of innovation, particularly I would say over the past 5 or 6 years. The company really hasn't done anything particularly innovative, but what they have done, and it goes kind of underneath the radar, is underneath the hoods of the phones and the computers, is they own the silicon, they own now the modem chips. Now they partner with some companies like ARM Holdings on the silicon and those types of things, but they've done a very nice job. Now, according to Citi, this new 16e phone should account for about 10% of the 2025 units. So I think investors probably properly didn't have this necessarily priced in, especially if Citi is correct here. If you get 10% of the units being this new 16e, now we would assume the gross margins are probably similar. Now, obviously it being a slightly cheaper phone, the revenue or the top line number, not the same, but we would assume the gross margins on these things, or the profit margin that Apple makes, probably relatively similar. Now, really interesting story here, because when we get to Tesla, we'll talk about how Grok 3 came out. Now, I've played around with enough with Grok 3 to know, what it's capable of doing. But what I haven't been able to play with yet is apparently it has a voice feature there, very similar to Alexa or Apple's Siri, where you can talk to it and have a conversation. Well, what we're finding is the companies that were kind of pioneers there, both Apple and Amazon, Apple with Siri, Amazon with Alexa, they're having trouble with their next generation of the upgrades of those voice assistants. Apple basically unveiled this AI rejuvenated Siri. This was at a developer conference last year. That was a really interesting conference. We're just seeing some of the features kind of make it into the software of the phone. Amazon was expected to release an update to Alexa next week on the 26th, but many believe that it won't actually be launched there. So it's really interesting. You're seeing advancements over at OpenAI. You're seeing advancement in other kind of speech to text or conversational. I know Google, I don't use Android devices, but I know people that do have them. They do like the conversational feature that is there with Gemini. Now, is it perfect? Does it work perfectly? No, but it's interesting that Apple and Amazon are struggling here. Now, speaking of Amazon and struggling a little bit, shares really took a turn down this week as they started at 228, down over 5%. Finished the week at 216. The company is closing a couple of business units, including their TikTok-like shopping service, which allowed you to, do some social media stuff and maybe sell some stuff. What I do like about Amazon is they try stuff and they give it a good try. And then if it doesn't work, they actually pull the plug rather quickly on these things. They also pulled the plug on their Chime communication service. This allowed people to chat and make business calls inside of the Chime feature, very similar to maybe like a Zoom or a Google Talk or maybe even like a Microsoft Teams. They pulled the plug on that. Now, headline that goes to ST Microelectronics, which is a semiconductor company, ticker symbol STM. The company announced a new data center chip that is going into some AWS servers. It's probably more of a benefit for STM as it relates to getting their chips out into the marketplace than it is something that'll be incremental for AWS, but it is showing that Amazon, obviously being a leader in that cloud computing space, gets a lot of semiconductor attention for them. Now, Adidas is launching Buy with Prime. So if you're on e-commerce websites that are not Amazon.com, but for example, if you're on Adidas's website and you're about to buy a pair of shoes or a tracksuit or whatever you're buying on Adidas these days, you can actually check out very similar to like the checkout flow as it relates to PayPal, or maybe even somewhat similar to like an Apple Pay. As you're checking out and you're giving your payment options, you can obviously enter your credit card. You could probably use Apple Pay. You can probably use a number of different payment flows. And Buy with Prime is an interesting feature that Amazon has launched. They tried it out, and what they found was, I think they're seeing pretty good service here. Now, as it relates to Adidas, Amazon looks like they're fulfilling some of these orders themselves as well. So if you're a merchant, you sell some goods on Amazon, or you're using their warehouse and their fulfillment services, this Buy with Prime thing can be a nice thing to layer on. Now, Amazon just took the quarterly revenue crown from Walmart. Now, our blue chip stock investor subscribers will get a full report on Walmart. They reported their earnings this Thursday. I've gone through them. Walmart looks good. It was due for a pullback, and I think there'll be some buying opportunities for Walmart here very soon, probably in the next, maybe in the next couple of months if the trend remains lower on the shares. But they had quarterly revenue at $180 billion. Amazon just reported revenue of $187 billion. Interestingly enough, for the full year, Wall Street is expecting over $700 billion of revenue for Walmart. Amazon coming in just under $700 billion. So analysts are more or less expecting the back half of the year for Walmart to be relatively good. And maybe the bar is actually set a little too low for Amazon as they got on their first quarter conference call and they basically tapped down the expectations. And that was probably one of the things that had Amazon shares reverse. So we'll see what happens in retail. There's some macroeconomic stuff, but in general, things look okay out there. Now, Jeff Bezos put out a tweet this week saying, who do you want to be the next James Bond? And some people even suggested that Jeff Bezos himself could actually play the next James Bond in the next movie. Now, what happened here is the previous producers of the James Bond films are no longer going to be involved in this. So now Amazon's MGM Studios is going to be in charge of the next Bond movies, and we'll see if, the franchise is really good. I'm not a big movie guy, so I can't tell you if they're any better or worse than in the past, but it'll be interesting to see if Amazon's able to really put out a good production, if they're able to put out a great production with James Bond, kind of resurrect it, if you will, into a top film, which it tends to be, but if they can really make it like a blockbuster type of film, well, then you've got merchandising, you've got all the stuff that follows that, maybe even a TV series, and so Amazon going to work there. Now, speaking of TV, film, entertainment, we go to Netflix. Start the week at 1054. For the first time ever, the stock actually reversed. Obviously, that's a joke, but we were down about 4.8% to finish the week, close to $1,000 on Netflix. Now, the company I think you all remember this, Netflix didn't have access to live sports. Now, more recently, they've made a huge push into this, okay? They've got the Women's World Cup. That'll be the next 2 years, or the new 2 iterations of that. They tested NFL games for the very first time on Christmas Day this year, and they saw astronomical ratings for that type of thing. So at Netflix, I think what they're seeing is not only do the current users like the live sports, they probably retain, not only do they retain current users with the live stuff, but they're probably attracting a ton of new people as well. I believe the WWE is airing regularly programming on Netflix. So this is turning into like much bigger media giant than I think even just a couple of years ago. Now, it will be a couple of years before Netflix is able to get regular. I think they'll probably do Christmas Day games. That's kind of a special thing, but Netflix wants to be involved in the NFL every Sunday. So it's going to be difficult though. The company or the NFL has an opt out of their initial agreement. It tends to be with CBS, Fox, and ESPN. They can opt out of that in 2029. The contract really goes through 2033. So when those negotiation comes up, I tell you what, if I had money and I just had all the endless amounts of money, I would probably buy an NFL team, because this seems to be like one of the most profitable things you can be a part of. Now, not all sports are created equal though, and that is because Disney this week, through their ESPN franchise, decided to part ways with Major League Baseball after the end of the 2025 season. ESPN has been airing baseball games for decades now, but apparently the MLB was upset with ESPN cutting some of its coverage, cutting some of the coverage that they've done of the games, and they were also looking for a reduced rights fee. ESPN has also been looking to cut costs, as it's obviously signed very expensive deals with the NBA and the NFL, and so the Major League Baseball deciding to part ways. So this could open the door up. Who wants access to the MLB? Has a slightly different demographic than the other major sports. It also tends to have slightly lower ratings, as people tend to only follow their in-market game or their in-market team as it relates to baseball. It's not for everybody, but broadly, most people that follow baseball tend to only follow one team, whereas the NFL, a lot of us will turn on the Thursday night game or the Monday game or Sunday games, and we're not necessarily a fan of those teams. We just will tune into that. So baseball slightly different, but this will certainly open the doors for maybe a Netflix. I don't think there's any rumors that they'll be interested here, but Apple and Roku already have deals with the MLB, and will be interesting to see if they expand those. Now, moving on to Nvidia. Start of the week at 142, the week before earnings. We are just a couple of days away from hearing from Nvidia. I mean, this is market making stuff depending on what Nvidia does. Shares were down about 5.5% this week to finish the week at 134. Nvidia's Blackwell demand, though, still remains unfazed by the DeepSeek situation. We've seen this over the past couple of weeks. We saw the CapEx numbers from Google and Microsoft and all the different cloud companies, Meta as well, and there was no slowdown, no pullback. We saw this week when we get to Tesla, the rollout or the Grok 3 AI assistant, that is soared to #1 on the App Store. And so what you're seeing inside of tech is a race that we haven't seen in a while. We saw it during the early days of the .com. If you're old like me, you remember the early days of the internet. A website would get announced and it would all of a sudden rocket up into popularity. Same thing happened when the original iPhone was released. So the original iPhone came out, and then what would happen is a game or an app or something got released on the iPhone, and all of a sudden it would rocket up into popularity. Okay, certainly you saw that with Uber and Netflix, and certainly certain types of video games as well. They would rocket up into popularity. We're seeing the same thing in AI. You can literally go from startup, which XAI was literally a start, it had nothing. This time last year, the company I don't even think really existed. Now they have the #1 app in the iPhone store. The same thing happened with DeepSeek a couple of weeks ago. So that excites from the startup perspective. It excites venture capitalists who see put in money and see the rapid development of something. And so Blackwell, this is all a long-winded way to say that Nvidia Blackwell demand will probably be absolutely fantastic. Now, a lot of analysts are chiming in, basically supporting the same thing, saying that you are seeing some constraints from a manufacturing perspective, a supply chain, but you are likely to see strong results when Nvidia reports. Now, the company reports their earnings next week. The expectations are for about $38 billion. That would be 72% growth rate year over year on Nvidia. I mean, their business has been on fire over the past couple of years, and it still remains so. Now, the high-end estimate on Wall Street is for $42 billion. The low end is for $37. My guesses will come in there. There are, constraints to how many of these things they can produce. What will be key for Nvidia is the next quarter guidance, but it's still, let me finish my thoughts here, okay? So the next quarter guidance is expected at $42 billion. Where it comes, who knows? But if Nvidia can come in that $40 billion range, the stock should at least hold its level. Where you have immediate upside with Nvidia are two different scenarios. Number one is if the upcoming quarter is somehow magically much higher than 42 billion. And I say magically because, again, this company relies on Taiwan Semiconductor and thousands of suppliers in order to pull these chips off. That is very, very difficult. This isn't like a piece of software that has infinite scale almost immediately. These are things that actually have to get manufactured. And so they're getting produced one by one by one. And obviously you can't rapidly scale that. And so if the high end estimate is close to $47 billion, you get any number from Nvidia, $47 billion, certainly anything with a 5 in front of it, $50 billion or higher, this stock will make a next new leg higher. The key for Nvidia is when they get on the conference call, because everything we've seen from Supermicro Computer, from Microsoft, from Amazon, from how they're allocating their money, the big CapEx spend is going to come at the end of summer, early fall, into the winter time, essentially summertime, Q2, Q3, Q4, later this year. That's when the big orders are going to come in. And how big are they going to be? Right now, we're seeing a compression on Wall Street in terms of expectations. At one time, I've seen $100 billion revenue estimates for Nvidia. Those have been taken off the table. Now the high-end estimates are for like mid to high $70 billion. If the company can produce that, you've got the next leg higher. If what the company delivers over the next 3 or 4 quarters is a number close to $40 to $50 billion, the stock won't meaningfully move much higher because most of this is already priced into the stock. We'll get clues next week as it relates to Nvidia. I am still on, if you were to ask me, which way is Nvidia going to come? Is Nvidia going to come towards the mid estimates, which is $46, $50 billion? I don't think we'll come in towards the low end estimate based on the CapEx we've seen from all the hyperscalers, based on all the knowledge that we know. I think the low end estimates for $40 billion in revenue, this is too low. The question is, can they come to the high end, which would be high $50 billion, $60 billion, potentially $70 billion in revenue? And if they can get Taiwan Semiconductor to make enough of these, I absolutely 100% believe that Nvidia could come towards the high end estimates. If they come to the high end estimates, then you've got another leg higher in Nvidia. Moving on to Google, start of the week at 185, down about 3%. I've been buying the dip on this one, down about $180 on Google. Now, YouTube's like one of the greatest deals in entertainment. If I were to say so myself, I think my YouTube Premium, where I basically avoid like watching any ads on the platform, I think it's like $13.99. Maybe it's a little higher than that. Maybe it's $14. Maybe it's higher than that. I don't know. I feel like they could double the price, triple the price. I'd probably still pay it. God bless any of you that watch my videos and have to sit through any ads. I mean, Google like runs a ton of them on this thing. So what they're going to do is roll out what they are going to call a premium light. This will be in major markets that'll allow you, and I don't know how the price can get any lower. And maybe I'm like the least like price sensitive guy in the world. I mean, I'm literally sitting here with like a gold Rolex and a Louis Vuitton sweater. So don't take my word for it when it comes to price sensitivity, because I clearly don't have a lot. But I can't believe that the price is going to get any lower. And if you're sitting there and you don't have YouTube Premium, like this seems to me like this would be like the most no-brainer thing to buy. And we'll see how Google rolls this out. And it's probably bad news for me because I can imagine the money I make, the small amount of money I make on these videos probably is only going to go down even further. Now, the EU regulators are set to charge Google for breaking these DMA, which is a Digital Market Act rules. Company's been under investigation since March of last year. These rules in Europe, I know I sit here as like a red-blooded American and I see these privacy things and I'm like, oh my gosh, this sounds terrible. Like people are posting memes and going to jail. Like if you're down with this and you live in Europe, that's fine. Like I'm not telling you how to run your country, but this seems like really, really crazy. And we'll see how the tech companies evolve from that. Because again, in America, I could see like Google being like, well, what, these rules are crazy because we're Americans and we don't really have any frame of reference for some of these things that are being passed in Europe from a privacy perspective or an anti-privacy perspective. So we'll see how these big tech companies balance that going forward. Now, moving on to Microsoft, start of the week at 409, basically flat on the week, kind of up and back down for Microsoft. OpenAI, this is really interesting as it relates to Microsoft. So OpenAI has obviously gotten a lot of funding, both privately, but obviously from Microsoft as well. But what they're forecasting in terms of financials that are kind of making the rounds in venture capital circles is the fact that they're going to rely more on SoftBank for capital rather than Microsoft. So you have that project Stargate that was announced a couple of weeks ago. Seems like years ago in terms of information flow, but that was announced at the White House. I think you had Larry Ellison there, you had Sam Altman, and you had Masa Son from SoftBank. And so it looks like those companies are kind of going to be partnering up on these types of projects. And it looks like SoftBank is actually going to be bankrolling OpenAI. And it just seems like SoftBank has like an unlimited amount of money. I mean, the company just figures out a way to get it. And so it'll be interesting to see the growth there. Could take some pressure off of Microsoft, okay, from having to invest and kind of prop up OpenAI. So I actually think this will be good for Microsoft stock going forward. Now, OpenAI launched their new operator, which is these AI agents, which allows you to basically tell the AI to do maybe like a multi-step task. It could be like, you know, like, hey, I'm going to go to New York. I need you to book me a flight. I need you to make me a reservation at Peter Luger's, and I need a rental car. Now, typically you would have to go through and kind of, you know, obviously, you know, how, as a human, how you would do that. Well, they're training these AI systems to be able to go to, you're going to have to go to maybe Delta Airlines, and then you're going to have to go to OpenTable, and then you're going to have to go to Hertz rental car to get that done. So that's multiple tasks. And so they're getting these AIs are capable of doing that. I think it's probably slightly overstated on social media. People are like, my mind is blown. It's like doing it, but it's not like perfect. You also have to take human hours to set these things up. And then like when you set these things up, you could have booked your flight, you could have booked your restaurant reservation, and you could have booked your rental car. So I don't think these things are really saving anybody's times, but in the future, from a business perspective, these things have huge use cases. Now, OpenAI crossed 400 million users for its chat GPT. This is amid DeepSeek. I think what DeepSeek does, and I think what we learned from DeepSeek, is it was a great marketing event, because I get on this program every day and I say, hey guys, if your grandma or your mom, in some cases, depending on how old you are, if they're not texting you and being like, I'm using chat GPT, it still means basically nobody is using this stuff. And so, but we are very rapidly moving into the era where maybe your mom is not going to log into ChatGPT, but she might be using a site that is using an API call to access ChatGPT. We're very, very quickly moving into that. And the more that happens, obviously, we want to connect some dots. It's great for the semiconductor business because the heavy computing power is actually running the application. The training is very capital intensive from a semiconductor perspective, but as more and more people use these things like DeepSeek, like ChatGPT, like AI agents, like chatbots on the, you know, for customer service on these different websites, the more that gets adopted, the more compute power you're actually going to need. Now, former OpenAI, which is really just seeing a lot of its C-suite kind of get broken off and basically quit, I think it's a testament to maybe the poor leadership, at least from a human perspective. I think Sam Altman is very good from a technical perspective, but I think he's probably somebody that from a human perspective, you don't want to work with him. And that has actually been the case with a lot of great tech entrepreneurs, okay? Elon Musk, very difficult to work with. Steve Jobs, very difficult to work with. Mark Zuckerberg, a lot of ways, very difficult to work with. You can kind of go on and on and on. So what you're seeing is a lot of the C-suite is starting their own artificial intelligence startups, and Miriati is starting her own called Thinking Machine Lab. And I tell you what, if you can get a job at one of those startups, it's probably going to be a pretty decent job. Now, Microsoft kind of buried a little bit of a lead here, but they unveiled a new quantum chip, saying that has a new topological semiconductor, and it's not a solid, it's not a liquid, or it's not a gas, but they have invented, allegedly over at Microsoft, a new state of matter. That seems like hyperbole, seems unbelievable. I'm going to spend the next couple of hours after the show to really dive into this. We'll talk about more of this on the Semiconductor Show. But you had a big surge in quantum stocks this week, and then they quickly reversed. If you've got the stomach to invest in like Qubits and QUBT and Rigetti, IonQ, I mean, if you have the stomach to invest in those, you are a better man than me, because I would not be able to do it. Now, like I said, you had kind of a rise and fall of those quantum stocks. If the markets continue to be bullish, those are probably, good names to be in. But if you have volatility, those things are going to be a nightmare from that perspective. Moving on to Tesla. Start of the week at 355, the EV maker slipping down by about 5%. You'll see this one technically as well, getting approaching a very, very, very clear. It's already in a buying zone, but you're approaching an area where you're going to be more aggressive with Tesla. As we finish the week at 337. Full self-driving approval in China. Full self-driving is the software that is available on all Teslas. Now, I use it a lot. I've got it on my Tesla. When I'm on the freeway, it's almost activated 100% of the time. When I'm driving around the town, less so. I don't live in like one of these big metropolitan areas, so it's not like I have to deal with a lot of that stuff. It does works very well on the highway, works okay on the city streets. It's not perfect. You get more error rate, at least in my testing of this, way more error rate on the city streets. The highway, it's almost dead on perfect. It works great. Now, would I sit in the back and watch it drive uncontrolled and without me at the wheel? Probably not, but I do trust it enough. I've got my kids in the back, and I do let the Tesla drive itself. Now, it needs approval by all the regulatory bodies, including China. And what's interesting, China's so savvy, right? From a country perspective, they play the long game on everything, and they're going to maybe potentially bring that to the bargaining table with President Trump, because they know that President Trump has got a great relationship with Elon Musk, at least at the current time. And with those trade tensions, they could anchor full self-driving approval in China. Once that comes if it comes for Tesla, if they're able to pull that off, that is probably a big deal for the stock, and probably a big deal not only from a news flow perspective, but probably a revenue perspective down in the road. And so if they tie those two things together, it'll be interesting to see if politically Trump can pull that off, or if it'll want to pull that off. Now, Tesla is hiring in India, another big market that the company is going after. Elon Musk met with the great prime minister from India. I believe that was last week or so. Now, many are presuming that the EV plans in the great country of India are going to continue to ramp up, as Tesla has selected several locations for showrooms to sell electric vehicles. I tell you what, if you capture some market share in India, that will be absolutely fantastic. As I said earlier in the show, XAI, which is not related to Tesla, but they could share technology, I would assume, here in the future. They released Grok 3, which I've had enough time to play around with. It is good. It is very good. I will say that the responses from Grok 3, it doesn't read as much like AI. When I read AI responses from Gemini or OpenAI or Anthropic, I read it, and maybe it's just because I know it's from AI. I read it and I'm like, this feels like an AI computer. I have read some responses from Grok 3 where I'm like, that's a little bit more human way to write. It's less like computer. And so that is showing things where it's going. The other example that I saw with Grok 3 was it's capable of making video games. And what was interesting is Elon Musk said that they're actually developing a video game studio inside of XAI. So that could be bullish. It could be bearish for some video game makers. Microsoft obviously owning Activision and Xbox, but you also have Take-Two Interactive and Electronic Arts as some of the bigger video game companies. We'll see what happens there, but I thought that was interesting as well. Now, very interesting headline that probably almost nobody saw was Nissan. Yeah, Nissan, which is struggling financially. So they were working with Honda for a partnership. It looks like those things have fallen apart. And I think kind of in an act of desperation, Nissan is looking around the car industry and they're saying, all these car companies are really struggling financially. Well, let me go to the one that actually has tens of billions of dollars in cash sitting on their balance sheet. I don't think Tesla has any debt at the current time. Tesla could also, if they needed to, raise probably $10 billion, probably relatively easily. Obviously, by diluting shareholders, they probably could go find a bank that would lend the money too. So Nissan is saying, well, maybe Tesla will want to partner with us or be a strategic investor. And they are hoping that Tesla wants to acquire Nissan's manufacturing plants in the United States. This is just my professional opinion. I don't think Tesla has the demand for more manufacturing facilities. If you look at Tesla's car business, it is like shrunk down to like a low single digit thing. And I don't see anything that will reaccelerate that, at least in the near term. Even if they come out with like a $20,000 car, even if they come out with the Cybercab and they get mass adoption there, maybe you have demand, but I think the company has enough capacity to fulfill that demand. And look, if cyber taxis and robo taxis, if these things become more popular, well, then I think it does take away from the demand for Model 3, Model Y, Model S, Model X, and so like, I think there's some push and pull there. We'll see though, if Tesla is interested in Nissan. Now, moving over to technical segment, big red candle today. I was busy for most of the day, but I checked on the markets and I was like, ooh, we got a nice little sell-off going here, but nothing to be over alarmed with at the current time. As you guys know, we've been locked in an uptrend for like 2 years. Pullbacks are expected. Now, more recently, really over the past year or so, the pullbacks have not been deep. And so the market has really been trained for the last, I would say, 7 or 8 months to step in here and buy the dip very quickly. At some point, that gives itself up too. I don't know. I think something from the news perspective would have to trigger that. Could be something politically, could be something fundamentally as well. Deeper pullbacks obviously should be bought, but I've been putting a little bit of money into these markets over this week. Now, Meta just made a new higher high, so you'd expect make a new higher high. You got to pull back in this one. Further pullbacks in Meta should be bought. Apple had a pullback, came back and retested the trend. You're still locked in an uptrend with Apple. Further pullbacks in that one should be bought. You had big red candle on Amazon. So I've been buying this dip. I've probably bought 30 or 40% of the Amazon that I kind of want. You are on an area of support. We're looking like really at this micro level. This has found support in the past. It's been resistance in the past, this 215 level with Amazon. I stepped on this one a little bit harder today. Further pullbacks in Amazon, though, we will be pounding the table. It'll be a major buying opportunity if you pull back into the low 200s on that one. Netflix has just been like clockwork, made a new higher high. You've got to pull back on that one. I mean, that one pulls back just a little bit. You should buy that one. Nvidia, slightly different scenario. That is because they report earnings Wednesday, the 26th next week. I thought we had a chance this week of setting up all the way up here to 150. Didn't quite make it. We'll see what happens Monday or Tuesday at next week. But you're placing your bets one side or the other with Nvidia. The way it's setting up right now, a bad report, bad guidance probably pulls you back into the 110s on this one, 115, 118, 110. A move higher, if it's not like astronomically good, I think can get you back into the 150. The real upside with this one is if the guidance and Jensen Huang's commentary on the conference call is really good, then you have a new paradigm with this one. New paradigms would take you back into the 160s, 170s, basically uncharted territory. Google continues to pull back. I've been buying this one, but very lightly, okay, because it's not like in a channel. It's just off an all-time high, but I have been stepping on this one because really the valuation is relatively good with Google. Microsoft's also one I've been adding to for the last several months now. Anytime we've pulled into this $400 area, do a very, very light buy. Now, the cool thing with Microsoft is I'm going to change this to a weekly view just so you get a really clear view of this. This uptrend, which is represented by this purple line, goes all the way back to 2015. I mean, 2015 seems like ages ago. So you've got a very clear trend. And like, is this the trend, this purple line? I mean, it kind of is. I think it is. You tend to get overextended. I mean, you can move it up a little higher if you want. no matter where you draw this purple long-term trend line is, you are approaching it. And so I really like areas like this where you're pulling back into these long-term trends. And look, if you're wrong on these long-term trends and it breaks down, it happens. It happens every once in a while, but it tends to be temporary. So I've been accumulating a little bit of Microsoft. And then finally, Tesla. I'm going to switch us back to a daily view just so we get a few more candles on this chart. Pulling back into, I think this is the uptrend we're in with Tesla. It's been intact, not for as long as many of these other stocks. Really back in April, it bottomed out. And really since this high back in July, that confirmed the trend. And you've been buying the dip. Now, we just made a new higher high back in December. We've been walking our way back. You know, with these middle of the channel, you've been buying. Now, I'm kind of fully allocated to Tesla. I view this as slightly more speculative, certainly than a Google or an Apple or an Amazon or a Meta, which have far more mature business models. Many of those stocks are buying back the stock. They're paying dividends. Their business models are a little bit more mature. With Tesla, they're relying on two things. Number one, full self-driving. Number two, the robots being the big wild card, because there is almost zero competition from a mega cap tech perspective on the robot side. If they can nail the robot, if you can buy a $25,000 robot in the next 24 months, that'll mow your lawn, that'll wipe down your countertops, that'll take out your dishes, this is going to become the biggest stock in the stock market. I mean, period, end of story. Because again, you can't apply a lot of the thinking to yourself. Some of you are watching out there and you're like, I would never buy a $25,000 robot. I am telling you right now, if you can get a robot that will mow the lawn, wipe down countertops, and take out dishes and maybe put clothes in and out of a washer and dryer, I would pay for that so quickly, especially if it was in the $25,000 to $30,000 range, because of all that time it would save me. I would make up that $20,000 that robot is taking from tasks that I would normally do. And then at night, if it roamed around my house, I live in a very safe neighborhood, so I'm not really concerned. But if it walked around my house and kept me safe, my God, I might buy two of them. Okay, so that is the market that is coming. Very well-off, affluent people would very comfortably pay $25,000, $30,000, let alone the Amazons, the Walmarts, the UPS, the FedEx, what they would pay for a product like that. So that is your upside with Tesla. As you pull back into these lower zones, it can create buying opportunities. Folks, that was a FAANG Stock recap show for Friday, February 21st. I hope you all have a great weekend. We'll be back next week for Nvidia earnings, but be sure to tune into the semiconductor show over on Equity Empire. We'll be previewing Nvidia's earnings more in depth. We'll talk more about that Microsoft quantum computing advancement, what that means for the market, among other things. Hopefully you guys enjoyed today's video. We'll be back again soon. Good luck with your investments.